What's going on, everyone? The market seems to remain bullish and optimistic in the short term and bearish in the long term. Let's go on and check out what the Fed said specifically. All right, so Jerome Powell had a meeting today at 2 and 2:30. Lots of news came out today. Number one, the Fed says that they may raise rates sooner than expected. So many Fed members believe that they will increase interest rates by 2022 or 2023. Okay. Number two is the Fed is not hindering or tapering back the asset purchases that it's doing every month, which is still very good for the stock market overall currently. I was saying that if the Fed did release news that they were going to stop buying back assets as much as they were before, that would be very bearish for stocks. But they said, hey, we're going to keep on buying as much as we are already. Don't worry about that. All right. So that's basically it. We saw the roller coaster going on today in the market. Lots of news for people to digest, but those were the two main points that you really needed to take into consideration. And without further ado, let's go on and look at the charts. All right, so this is the SPY, and we were drawing out this rising wedge that I had drawn out. I was showing you guys. And yesterday we ended up breaking down below. And today we ended up falling even further, all the way down to 419.92. Okay. But this level of support right here, this trend line right here, right? I'm going to go to the SPX. I'm going to show you guys because it's a much cleaner chart. All right, this is crazy. So we essentially, all right, here's October 2019. And I drew a trend line connecting from October 2019, the lows. We saw that it touched to the top of the September 2020. And then it acted as resistance all throughout this year, right? But when it finally broke above, the SPY broke above 404. If you guys remember when the SPY broke above 400 and then broke above 404, things were extremely bullish. And that is exactly when we crossed above this trend line. Now, what's interesting is that that same trend line is now acting as support currently, which is bonkers. So that is exactly literally where we bounced off of and we closed above it. All right, on the SPY. Also, to take into consideration, the MACD, you can see the MACD is now oversold. It vomited, okay? Because the SPY also, had a very downward move. But the fact that we broke out of this rising wedge pattern is very bearish. But the fact that we held at this support is very important, okay? So now this is the new level of support for the SPY, this trend line here, essentially, okay? We see that the RSI also took a downturn. The MACD crossed below, and when it crossed below, it also went in confluence when it broke out of this rising wedge pattern, which is bearish, right? So regardless, I said that, the indicators looked ridiculously strong, but the price action failed to maintain a bullish structure, and it broke. So that's why we see the MACD vomited a bit. We see the RSI vomited a bit. Let me go ahead and tell you the exact level of support. Wow, this is so clean. It doesn't get any better than this, honestly. So, so for tomorrow, the level of support approximately on the SPY is going to be around 422. All right. Wow, it's down heavy in the post market as well, but that's fine. So, yeah, 422 is the level of support or resistance, essentially, on the SPY. The next level of support is going to be this lower trend line here, which is a connection of from May. Sorry, no. Yeah, this is the bottom of the March 2020 bottom. Yeah. So I need to look at these I need to clean up the chart a bit, but yeah, that's basically it. So it's going to be from the March 2020 bottom. Multiple touches, that's going to be the next support right here. And it's basically in confluence with this 418.25 level. that is, you know, what we've been looking at for quite some time. So back here when we were trading, you know, all of this stuff right here, 418.25 was a very strong level of support and resistance for us. And that trend line that we were looking at just now was completely irrelevant. But as time went on, it became relevant. So yeah, we need to just keep our eyes on 422. And then this trend line, if it breaks that trend line, then it's going to break. So the trend line is approximately at 419. If that breaks, then 418.25 is the next level of support. So I'm expecting the SPY to potentially fall down a bit more, maybe retest this trend line, retest the 418 level. By that time, the MACD is going to become extremely oversold, even lower. The RSI is going to fall much lower as well. And that would give a lot of steam to accumulate and have a nice pop upward on the SPY. Because short term, currently, the Fed is still continuing to buy back stock and buy back assets, okay? They're saying that don't worry about the inflation rate. Don't worry about buybacks. We're going to continue doing what we have to do to keep the economy afloat. So when that news comes out, I mean, hey, like, sure. Like, nothing really changed, except the longer term outlook is just much more bearish and uncertain. But no one really cares about the longer term outlook. If you're trading day to day, and, you know, unless you're managing like billions of dollars where interest rates affect your bottom line, right? So to the average person, the stock market, you could make money on it regardless of whether or not, you know, interest rates are going up or not. The economy is not doing too well, but obviously the economy hasn't been doing well this entire time, but the stock market is at a new all-time high. Okay, so the economy and the stock market are two completely different things. Don't get it twisted and confused. The Nasdaq. Obviously, the Nasdaq was going to get hit the hardest if the Fed was going to give bad news, right? So I said that if they were going to start tapering back on asset purchases, the Nasdaq would get hit the hardest. And we ended up breaking all of these levels of support, but we bounced back and found support right back at 340.78. So 340.78 is the level of support to hold. We can see that, you know, I think I said yesterday in yesterday's video, maybe we would have like a few days of accumulation. It would give time for the Qs to you know, cool down a bit and create a bull flag, but basically this happened in one day. So now let's see if we can hold. The level that it needs to hold on the Qs is 340.78. If that doesn't hold, then this low here is going to be the support, and all of these three lines here. So let's see if the Qs don't break these levels and find support here. By that time, the MACD is going to cool down. The RSI is going to cool down. We'll find support, create some sort of a bullish pattern here, and give more room to the upside, okay? So there's the Qs. The IWM had a very strong rally, especially the XLF, which is the bank ETF. So the IWM actually did pretty good because, you know, interest rate news and like an increase in interest rates is good for banks. So if rates increase from 2% to 3%, that means that banks are getting a 50% increase in their money generated from interest rates. So that is a very good sign because, you know, 2% to 3% is a 50% increase from 2 to 3, right? So that's why overall the banking sector and the IWM did pretty well. We held this support very nicely, the same 228.08 support. So now we can see, you know, it's a bullish structure. We found support. The RSI, the MACD is extremely oversold now. But 228.08 needs to remain holding. Let's see if that level does continue to hold. If not, then we would have to consider where we find support. But again, 228.08 needs to hold on the IWM. The MACD is extremely oversold. But, you know, especially with Friday, it's quad witching. So there's still a lot of uncertainty in the market currently in regards to like longer term outlook. But the fact that the Fed is going to continue the fact that the Fed is going to continue buying back stock is a very good sign for the overall stock market in the short term. All right. We might see a bit of a correction, but, you know, towards the end of the year, definitely think that we're going to be up here. So yeah, let's see how all of that plays out. There's the IWM. We definitely have to look at the dollar, but first, let's look at crude oil. So crude oil, crude oil is ridiculous right now. Oh, 1 second. I want to look at the Bollinger Bands on everything. Yep. So the SPY bounced off of the 20 exponential moving average perfectly. The Qs, yeah, the Bollinger Bands aren't really in effect, but you can see that they're pointed upward. Like, that is ridiculous. So whenever you see the B bands pointed upward like this, that's a very bullish sign. And the IWM, yeah, all right, not really important. All right, so cool. Let's look at crude oil. Crude oil, it broke out of a rising wedge to the upside when the SPY broke down from the rising wedge, which is what normally should happen. So obviously, you know, today there was a bit of a correction. I mean, crude oil has just been going crazy right now, but, you know, with interest rates going up, with potential news of interest rates going up, crude oil took a bit of a hit because that means that consumers won't be able to pay for oil as much. And the overall outlook to companies that depend on oil fell a bit. But I mean, look, this is normal. Like, we've been rallying for how long? We've been rallying for quite some time. This is a 26% increase in price over the past like month and a half, 2 months. So yeah, that's fine. But yeah, this level of support that needs to hold for tomorrow is approximately 71.20. So let's see how crude oil does. But overall, when crude oil is doing well, the stock market is going to continue doing well. All right, so there's crude oil. So now the US 10-year yield, obviously, it obviously had a green day because news about interest rate hike came out. So the US, the 10-year yield of how much percentage you can get if you invested in the US economy for, you know, the next 10 years went up because they're saying that there will be an increase in interest rates by 2022 or 2023. So that means that, hey, you know, like, if you want a very, very safe investment, you can invest in this 10-year yield and you will get a solid 1.57% of your money per year. So that is why it basically increased. Now we can go ahead and look at the dollar. Add that to my chart. Oh, there it is. So that's crazy. So oh man. So the dollar, look at where it failed. It failed exactly at 91.37, which is, I haven't changed this line. It literally failed exactly at that. This is the resistance. Had a huge rally. It stopped at our resistance line perfectly. Okay, so obviously the dollar had a strong move to the upside. The VIX was completely destroyed. But yeah, the dollar had a strong move. It crossed above resistance. How much did it go up? 1%. Oh, yeah, there it is. Yeah, so it went up 1%, which is a lot. You can see that this move doesn't usually happen on the dollar. But yeah, you know, it is what it is. The dollar goes up, the stock market goes down, but it's because the stock market, you know, recovered, or else the dollar, I think, would have broken this resistance and just skyrocketed. So yeah, the dollar 91.38, 91.37 is the level that we need to continue watching for the dollar. All right, so yesterday we were looking at Bitcoin, and I was saying how 41,370 was a very important level for Bitcoin to, break above. And if we broke above that, that's when I would become a bit more bullish. It was in confluence with the lower trend line here, yada yada yada, right? But look, let me extend this to the right. You'll probably hit price point perfectly. All right, almost perfectly, almost perfect. But yeah, so that's where that level of resistance was. We couldn't break above 41.37, but it also was the 38.2% Fibonacci level. All right, so that was an extremely important level to reclaim. We failed to reclaim that. The Bitcoin doesn't look too great, but the next level of support on Bitcoin is going to be approximately 37,000, which is the 23.6% Fib level. Let's see if we can do that. We broke out of the, it's pretty normal because we broke out of this triangle here. You can see this triangle. Let me go ahead and darker. You see that line and this line? Triangle, right? So what I said can usually happen when we do break out of a triangle, and whenever we look at triangles on technical analysis, there's two things that might happen. Number one, after breaking out, right, we'll have 1 or 2 days of green, right? And then what might end up happening is we'll retest the price that we broke out from, which is 37.6, right? Essentially, right here. Or we'll come back and retest the trend line itself. So that's what's essentially happening right now. But it's a waiting game. We have to see how Bitcoin responds around this level here, basically. Ooh, wow. Around 37.6 or 36.8, essentially. That zone, that $1,000 zone, basically, we need to see if Bitcoin can maintain. If not, then the next level that we're going to have to watch is between 34,500 or 35,500, which are these two trend lines here. And then, yeah, aside from that, that's really it for Bitcoin. Nothing we didn't really already know. This was a level that needed to break. It didn't break. Now it's coming to retest the breakout zone of this triangle. Let's see if we can hold. If not, we're gonna look at whether or not it can hold these supports. All right. Ethereum. Ethereum's keying off of Bitcoin and obviously the strong dollar, which is why the crypto market took a tumble today. Because also the overall stock market did fall as well. So yeah, now Ethereum is at a very important level of support. It's in confluence with the 23.6% Fib level at 23.48. Also at the bottom level of this triangle. So we need to see if we can break out from here now and see if we can get some buyers here and then go on higher for Ethereum. And obviously, the next level of resistance is going to continue to be the 38.2% Fib level at 27.36. Okay, on Ethereum. All right, so now let's get right into the stocks that you guys wanted me to do technical analysis on. As we can see, Apple bounced exactly off of the same trend line that we've consistently been looking at. I said that 124.40 was support. I think 128.40 was support, and it went to a low of 128.46. So obviously things worked out pretty well. The support held. It bounced back above the 50 exponential moving average, which is this line right here, and it went all the way back up to approximately where it opened. So overall, a pretty bullish reversal on all of the tech sector and most of the stock market in general. NEO, very similar. It ended up closing green after opening very low. It bounced exactly off of the 10 simple moving average, which was pretty nice. So if this doesn't hold, right, and you could also see that the MACD is oversold now, which is bullish because it means that there is room for it to go upward. But the RSI doesn't look very strong to me because, we went down pretty substantially, but the RSI didn't really go down in confluence with the price action. So that might be an issue in the coming days. Essentially, if today's lows don't hold, sorry, if 43.77 doesn't hold, right? There's multiple levels of, support in here, right? But the main level of support that we need to watch is 41.20. So what might happen, and is the theme for the rest of the market currently, is are we going to make highs and then retrace back down to support, create some sort of a flag, a bull flag potentially, and then break out of that bull flag? So that's essentially what might potentially happen on NEO as well. If today's lows don't hold, then we will retest 41.20 most likely. That would also give enough time for the MACD to cool down, as well as the RSI. And then from there could be a much stronger move to the upside. Overall, it is very, very bullish. I mean, clearly, like, we've bounced very, very heavily, and we've made, consistent green days, higher lows, which is a very good sign. But now we just need to see if this can maintain itself. And yeah, so if 43.77 doesn't hold, then, I mean, you could look at 42.16 as support. But then the big important level is 41.20 on NEO. But yeah, so obviously if yesterday's close was 45.15, if we can cross above 45.15, it might have a very strong short-term rally to the upside. I'm talking about intraday. So yeah, keep your eyes on that level as well. Let's look at GameStop now. So obviously GameStop is going to go to the moon, right? Currently it's having a bit of trouble at the 38.2% fib level at 230, right? It's acted as resistance multiple times, right? Whatchamacallit. So we just need to cross above 230 and hold, right? So when it did cross above and closed above 230 multiple times, that's when rallies happened. Okay, so we can see the last rally, the most recent one, similar, right? But we did have one close on June 11th, but then we couldn't have two closes above 230. So that's what we need to continue watching. The level of support on GameStop is obviously going to be first 206.13, and then the big one is the 50% fib level at 193.50. All right, which is also in confluence with this 50 simple moving average. So yeah, that's going to be the main big level of support. And it's a good sign that the MACD is oversold currently, which means that there is room for it to skyrocket. And yeah, we're essentially oversold at support. Let's see if we can bring it down a bit more and consolidate a bit. But currently we're consolidating. We're making higher lows, which is good on GameStop. So let's see if the apes can send it sooner rather than later, right? AMC is getting a lot of attention currently, which is great. It bounced exactly off of the 10 simple moving average. We can see here. The next level of support for AMC is going to be tomorrow at approximately, it's going to be at approximately 51.73 for tomorrow. We see the MACD is curling up, and when the MACD line crosses above the yellow line, that is very bullish. So let's see if that can happen. The RSI is not overbought anymore, which is another bullish sign because it means that there's more room to the upside. And we can see, this is a bull flag. So let's see if we can cross out of that, which is it's a very bullish pattern. So yeah, we can see that it failed at the 23.6% fib level. That support didn't hold. It broke down and it bounced off of the 10 simple moving average. So really tomorrow, 51.75 needs to hold, and then another big level of support is the 38.2% fib level at 49.47. All right, so that's that on AMC. ATOS. So we can see that it was also forming a rising wedge. We broke to the downside a bit today, but we closed above that line again. The level of support for tomorrow, I mean, if this doesn't go higher in the post market, then it failed the rising wedge, right? So that means it's going to go down to the downside. First level of support is approximately today's lows, which is 445, right? But for tomorrow, the main level of support is going to be approximately 426. All right, that's also in accordance with this uptrend line. So let's see if we can retest this line and continue on higher. But if this fails and it breaks, and then this level breaks as well, I would definitely either just sell my position or go short. The MACD is oversold. The RSI is stagnant. So this should give, potential steam to make an upward break. If it fails this and then it finds consolidation along this trend line, that can be a potential very bullish move for ATOS. But currently, it had a downward move outside of the rising wedge, and I think it's gonna break 443 and then retest 426. But let's see what happens. Anything can really happen in the after hours. But another one extreme, a very important level of resistance currently has not been able to cross above or close above, rather, is the 10 simple moving average, which is this black line. So today, the 10 simple moving average was at 478. So the 10 simple moving average is currently acting as resistance. So just keep your eye on that. LKCO, I think we went over this a few days ago. I said that if $2 doesn't hold, then the next level that is going to be retested is approximately. So I mean, I'm not even whatever. Regardless of what I said, $2 didn't hold, right? Yeah, I said 196. Yeah, so 196 was the next level of support. But then what ended up happening is we filled this gap all within one day. So you see here there was a gap right here at 189. So as soon as $2 broke and 196 broke, we went and filled the gap, and we ended up going even lower than 189. But we, bounced right back up because that's what the market did in general, which is a good sign. And we, obviously we were trading outside of the upper level of the B band, which is another reason why we had to have somewhat of a correctional move. And we did that. We filled the gap and we continued on upward. So once again, 189 is a very important level of support for LKCO for now, right? 189, 196, and $2. If those levels of support hold, then, you can continue on higher. But if those don't, then that looks very bad, especially because the MACD is extremely overbought currently. When the MACD is extremely overbought like this, it doesn't bode well for, the stock in general. So if this blue line was on the bottom right here and we looked like this, that would be much better, and then we can cross up higher. But the fact that it's the other way around means that there's more potential room to the downside. So just be careful on LKCO. Keep your levels tight. All right, Matic. Matic, very similar to the rest of the crypto market, obviously, because Bitcoin and Ethereum didn't do well. It failed. I mean, it didn't fail, but a very important level of support that broke down a bit currently is 1.52, and this is happening in real time. We can see that it didn't hold the 50% fib level here. The next level of support is going to be the 10 simple moving average at 145. But overall, it's normal because, similarly to Bitcoin, what I was saying was obviously as we broke out of a triangle, right? Let me take this off. Okay. So you see that we formed a triangle. There was a downtrend line, but we broke above it, right? So usually two things happen. So obviously we're going to have 2 days of 1 to 2 days of green move, right? I've been saying this for the past few days. We're going to have 1 to 2 days. You almost always, whenever we cross out of a downtrend line, this is almost always what happens. We break out, we have 1 or 2 green days, okay? And then what happens is we either retest the breakout price, which is right here, right? We either retest that breakout price, or we fall down even lower and retest the trend line itself. So currently, Matic is coming close to retesting the breakdown price, which is around 146, 145. So let's see if Matic can hold 146 or 145. That'll be very bullish. And that'll mean that, it's creating a bull flag, and it'll still have more room to go to the upside. But if it retests the trend line itself, it's not as bullish, because it would mean that it was a failed fake out breakout, right? So then if 145 or 146 doesn't hold, the next key level of support is going to essentially be around 128, essentially 127 to 130, okay? This zone here, this trend line, essentially, right? If that doesn't hold, then this is the main level of support right here, the 0.618 level, 124. And that's that for Matic. Overall, Matic is really good, but another thing to look for is that the MACD is overbought. All right, so when the MACD is overbought, it means that there's more potential room to the downside. And usually when the MACD is overbought, you can look at past price history. It doesn't do too well. It always usually goes back down. And yeah, that's basically it for Matic. Workhorse. So Workhorse held support pretty nicely, regardless of what was going on in the market. Workhorse looks really, really strong, man. Workhorse has a very good setup currently. The only thing is the 10 simple moving average is acting as resistance. If we can break 15, right, that would be really good for Workhorse, because look at this. It's oversold on the MACD, right, which means that it'll give more potential room to the upside. It held this level of support, which was yesterday's lows, really well, and we closed above it. And, we retraced back this entire move, essentially. And another thing to keep in mind is that, we created a bull flag here. And, yeah, now it's just a matter of seeing whether or not this support holds. If it does, then we can make new highs all the way potentially to like $22, which is pretty nice on Workhorse. So we just have to continue watching yesterday's lows, really, which is 1369. 1369 continues to hold, and if we break above $15 and remain above $15, then it'll give room for Workhorse to fulfill this bullish pattern, to create a bullish move, and yeah, be really nice. So there's that for today. I hope you guys enjoyed the video. Like, comment, subscribe. That's fine. Send me a message. Let me know if there's anything else I can do better for you guys. If you guys want any more information, if you need help learning how to trade, I can send you all these courses and books and everything for free. Yeah, just send me a message. And I hope you guys liked the video. Have an amazing day. I'll see you guys tomorrow.